Asha, and welcome to episode number 148 of Let's Talk Stocks. And today's episode is going to be more about stock market wisdom. So that's what we'll cover today, is just looking at reviewing some stocks. And I'm going to cover at least 20 different stocks here that I have on my list. They're not in any particular order, but they are the more popular ones on here as far as the market goes, as far as trading volume, and just a few things that caught my attention. So a lot of these things people ask questions about. So I figured I'd give some insights to these stocks, how they're moving, acting, behaving, and just the overall market, since I haven't done one of these recaps in a little bit of time. So we were on vacation here over the last month. I'm back now. A lot of things to take care of, a lot of great stuff coming up here in the fall season. Coming into next year, a lot of work to do. So let's get into it. Let's start talking about some of these stocks and take a look at the markets. Of course, before we get into anything, remember that none of these trades, stocks, charts are recommendations to buy, sell, or trade any securities. I don't really know you. I don't know your risk tolerance. I don't know your goals. So they may or may not apply to you, and our strategies might be different. So it's important you always look at your own personal self and see your risk tolerance, your risk levels. And if you have any questions about investments, then contact your personal financial advisor, not me directly. Everyone's situation is different. But what I'll do is give you some insights to some charts, looking at some technical analysis, so that way you get a bigger picture perspective of what I see in the charts from my years of experience. So let's take a quick peek here and let's look at the overall market here and what's going on. So when we look at the S&P, and I've had a lot of great sessions here, actually chatting with some coaching students here since I've been back, just live chatting with some people as well about the market, the way that it's behaving. And just to give you an overall picture here, when I look at the market, here's what I'm watching, is that normally, when you have these pullbacks like this, it's always a great opportunity. Pullbacks, just like in 2009, 2007, there are these dot-com bubbles as well. So when you look at this right here, great buying opportunity. Same thing in the 2000, 2003, great buying opportunity. So that later things can go much higher. And then when you get these pullbacks, again, they're great buying opportunities. So if we get another slight pullback, it's going to be another great buying opportunity, more than likely. The market in general continues to go higher. That's just with time, and that's just the nature of just, well, think of it, inflation, right? With time, prices just naturally go up, cereal boxes get smaller. That's just the way things work. So in either case, what I like is when things pull back at least a little bit, even if they pull back 5%, 3%, 1%, 5%, 10%, I like that because then I can buy more in the future. Now the question is how far are they going to go? And one thing that I look for when I'm looking for a change is I always look at the volume. And when I look at the volume here, one thing that caught my eye here was, actually if we take a look at the SPY, it's a little easier to see on the volume, especially people that were cheering the bounce. So we had a major sell-off right here, call it, what day was that? About the 10th, 11th. We had a major sell-off there with massive volume, about 120 million on the SPY. Stocks continue to go higher, but the volume was a lot weaker. So if you look at that volume, much, much weaker, maybe right around 77 million. Then we started to roll back over, again, with heavier volume, even more so than the previous time. And then again, even more volume. Now that kind of stabilized things, and then we got a little bounce, but again, light volume. So now we're kind of consolidating a little bit sideways, but what I'm watching is that we're creating lower highs, right? So you're looking at this, creating lower highs. I wouldn't be surprised if this bounces a little bit into this resistance level and then rolls over, because once you get 2 points, you create a line. Once you get 3 points, it's a confirmation. So if we get another little couple days of bounces and roll over on lighter volume, and we roll over on higher volume, that's good. That's good for the downside. It's not good if you're bullish, but it's good for the downside, because then it allows you to buy more somewhere around maybe the $240 or $2,400 level, and then you'll see if you get a bounce here or there. So that's kind of one of the price ranges I'm watching, and that was the key, really, was when you go into this, and you can do the same thing with the IWM, which I evaluated it quite a bit here. When you look at IWM, there's a lot of people that talked about, well, look at that bounce after that massive sell-off day. Yeah, but the bounce was on lighter volume. When you have low gas in the gas tank, you can't go that far. Can you keep pushing the car if you get outside of the car and you push it? Yeah, you can, but you get tired. So the same thing here. You notice we get tired, we sell off, okay? Then we try it again, we might get tired. And again, when you watch the market and you just watch the daily action, you notice the market's a little bit tired. The behavior, right? So if I'm over here speaking to you directly, and right now this is my normal tone, my normal voice, but now I start talking like this, and then I'm tired. That's what the market's doing. So right now it's acting a bit tired. And that's partly due to this summer season. That's partly just due to the lack of volume, the traders. Things will probably pick up soon. The problem is what you're watching for is the risk is, will we get traders stepping up to the sell side or the buy side, right? That's the bigger question. And the way you start looking at this is you start looking at the popular companies. Where is really all the money in, right? It's not in the penny stocks, it's in these big popular companies. And then you look at how those companies are behaving. And if those companies break down, then the market's going to break down. So take, for example, a quick example of Starbucks here. Notice how this stock has been consolidating for about 2 years. And right now it's at that support level right here, but it's been selling off on these heavier bearish volume bars. And if we get a break right here at this price point of about, call it $52, if we break lower on this stock, along with multiple other stocks, then you could probably see this market roll over. Take, for example, Amazon as well. So looking at this one coming into, this consolidation area, we used to be at about 1,050. Let's see here, about 1,080. And this stock right here is at 950, and we broke 950 today, even 945. If this starts to roll over the next day or two, so we start looking at it, we start to roll over and we go under it even more so with more volume, then you could see things even continue to pick up to the downside, and it might even hit that $900 level. So that's really what you're watching in these in this stock and in these other companies. So let's take a quick look at some of these other companies that I'm watching, and just some companies that have been moving and some popular companies. So I'll just kind of go in order of some of the more popular ones real quick. Let's take a look at Google. I'll just rifle away here, show you some key lines I'm watching and what I'm looking at. Right here's your line of support on Google, right around 900 level. If you want to try to buy the dip, 900 might be nice. But the problem is if we break that 900, you have a gap over here. It could fill the gap, get into that level, and even the 850 level. The volume right now has been slightly decreasing as far as the bearish volume goes, and it seems to be somewhat stable here. It's about 20 points above that level. So far it looks like a fairly decent value buy. However, keep in mind we're rolling over on this moving average, and you do have a double top right there. So overall, there's your line in the sand is the 900 level, and usually it's give it about 5 or 10 points on this one, especially it's a larger company. There's no major selling volume and pressure on this one at the moment when you compare it to like Amazon. So here with Amazon, as we look into Amazon, you can see that right here we have bearish volume that starts to kick in. We got a little too far stretched up there. You can see we're creating kind of lower highs in this stock. If we break above that price level right there, that might be a nice buying opportunity, especially as we're kind of forming a little triangle consolidation pattern right there. So the support on the short term is right here. If you really look at this stock out wide, you could get into the maybe the 840 price level, somewhere around there on a healthy pullback. But that, of course, is from here. You're looking at about 100 and so points. Taking a look at Win right here, this one's moving in a stair-step pattern. As we take a look at this breakout point here, here was our consolidation, stair-step again, next level, stock is now moving a little sideways. Your next entry point would be kind of on this bounce right here or a breakout right there. Right now stock's doing okay, but the volume is contracting. So just keep an eye on, see what happens. Foot Locker is doing horrible. So if you take a look at this one, we've talked about this one in our critical chart membership plans. Major double top, triple top, quadruple top. Stock got into the support level, broke into that. You could also see this upward pattern, broke down here. A little consolidation, tried to get back into it, rejected it, continued to sell it. Couldn't even hold support there and just continues to act weak on accelerated volume. That volume just continues to pick up. My prediction probably will go even lower here. We're trying to get a little bounce here. You know, what I would say is if we get a little bounce, maybe to 37 and then roll back, maybe somewhere around that 20, that's probably where it'll stop. Because usually, remember, things get oversold anyways in the marketplace with time, simply because of the shorts that pile in. Otherwise, this one's acting quite weak. If you look at CMG, same thing. If we look at the weekly, here's our, by the way, ABCD pattern. Let's just take a look here. So if we draw a line from here to here, then right there up till multiple years from 2009 to 2012, that's our A to B. We pull back in kind of late 2012 to our C point, and then the C to D is all the way up to 2015. Now we're kind of creating the same concept to the downside. So you have an ABCD pattern to the downside, and if this continues to move as I project it to, we have about 390 points to the downside. So here 390 may put this stock at about $100, 100 and some dollars. We'll see if it gets there. It's quite a bit. There's a lot of support levels before there. So somewhere around the swing lows of 2012, that'll be about a $236 price level. Stock may get a bid. Simply, it's a huge company. GoPro's been toast for quite a while. This one, ABCD pattern to the downside. I don't see it coming out of the gutter anytime soon. It continues to make lower prices. We did have a little bit of volume there kick in, but otherwise this stock is dead. It's flatlined. You can see the heartbeat. It needs to get up about $18 to probably get any insight on there, which means a lot of new product developments and many things. Company, I like the products, but stocks, I don't like it. Look at Buffalo Wild Wings. This one we had in the critical charts, breakdown here at the 150. You can see some resistance levels right here. They didn't work out perfectly, but you could see a few of them tried to break out. And we also had this upward supporting trend line breakdown right there. Bearish volume picking up also as we break this other key levels of support. This stock now continues to move lower. Somewhere around this line right here, which would put us around $90, would be a potential support level. So you can see how some of these stocks are selling off in a big way. Amazon or Facebook here, if we look at Facebook, it's been consolidating since those earnings reports. This is why I say don't chase the earnings, because if you do, I mean, look what happens right here. Facebook, and then it goes sideways. You could buy it lower after the earnings. That's why you don't buy into the hype. That's just emotional trading right here. Emotional trading. And now you can see you got same kind of opportunity, light bearish volume, not anything heavy. So it's just consolidation. If we break below that level though, right here, it would be 165. If we break lower than 165, the stock could pull back. Right now, if you look at the weekly, we are a little stretched. If you want to do something like the Bollinger Bands and you start looking at Facebook on the weekly, we are up near those higher levels. Let's take a look at Netflix because it's the same concept right here. Earnings, couple days of earnings, great for a day trade or a couple days swing trade. Stock starts selling off, comes back, boom, fills this gap right here. And you, again, get it in at better prices than even at earnings. Everything's great. And then later, about a month later, well, you could get it cheaper prices than earnings, right? So that's why you don't have to really worry about earnings and what they say. Don't buy into the hype. So here you're buying it at a fairly good deal when you're looking at a moving average and when you're looking at this key line of support. However, stock's been acting a little bit weak and there's some pressure with like Disney removing its content and those kinds of things. So, so just be careful here. Watch this key line of support. If this starts to break down, wouldn't shock me if this stock got into somewhere around 148, 149, 150 level. So that'll be about 20 points down from here, which is not that much when it comes to the stock. Sometimes it'll move 10, 12 bucks in a day. These stocks move quick. Take a look at Apple. It's been holding up well since breaking this line of resistance. That's the earnings right there. I like the stock when it comes to Apple. I don't like the products, which is kind of opposite of GoPro. So it's interesting and fascinating, but yeah, I don't really care too much for the products, but the stock has always been doing very well. A lot of other people love it. So here, it's holding up well. I would watch this line right there on that support. That'll be the 155 level. If it breaks this, I wouldn't hesitate to short it, especially if the market rolls with it. Remember, when you short stocks, you're only holding them for a few days usually. Shorting is always faster, right, than holding long. If you hold long, it could be for weeks, months, or years. If you're shorting things, just like when you look at the SPX, right? So this might be a short over here. It might be for the day, you know, or over here, it could be for a day or two or a couple days, but it's not, it might be even for a week, but we're not in a bear market yet. Okay. We're not crashing yet. So when you short things and you short companies, even companies like Foot Locker, you know, even here, it might be only just for a couple months, and then things usually pick back up. And that is because when you short things, they're faster. Everything is faster, right? Even CMG, when you look at this, you know, this shorting opportunity right here, which I traded, and, you know, it's just a month or two. It wasn't, you know, multiple years, but when you're in the stock, you know, here, you might be holding the stock for 2-3 years, right? I mean, getting in and out of it, taking shares off, that kind of thing, but you're still in the stock. Whereas when you're shorting it, it's for a smaller time frame and smaller time period. Take a look at Priceline here. When we look at Priceline, this is trying to hold this level. The problem with a lot of stocks, like these big companies at these levels, the same thing with when you look at things like the Starbucks at these levels, they're trying to bid and bounce at these levels. And they've done it multiple times. As you can see in the past, they've held these levels perfectly fine. The problem is think of it like a jackhammer. The more that you're using that jackhammer on the floor, the more likely it's going to break that floor, right? If you do use a jackhammer on your roof and you're just trying to, you know, break through that ceiling from the second floor to the first floor or the third floor to the second floor, you know, eventually with time it breaks. So that's why when you get volume and price action that just keeps hitting and pounding, eventually it breaks through. That's what happens. So be careful. Sometimes it builds for things. It builds momentum for the upside. But other times, if you notice the action and the behavior, stocks acting sluggishly, that's really where things can be trouble, especially with an administration that's a little bit clueless. You know, you have government potential shutdowns. You know, there's a lot of negative news and PR. The thing with this market is that they've been brushing it off, but it wouldn't shock me if, again, you get another 40-point down day on a random Tuesday or Wednesday. It just on the S&P. It just, you have to be prepared for it in these kinds of conditions. DRE, Duke Realty here, looking right here at a potential breakout. It's fairly new right there. You can see the resistance level caught my eye. So you can see that. The only issue here that I'm noticing is that when you start looking at this, you can see we're just, you know, a little pullback here today. The volume also is not anything amazing, a little bit more so on that breakout, but other than that, not anything huge or, you know, amazing when it comes to the overall breakout. AutoZone here, we've talked about this in the critical charts, multiple resistance level. Here was a breakdown. Again, stocks sold off in a major way after like a 10-year massive run up. 500 seems to be a nice bid area that things are catching on. If you took my verticals course, you know, you could definitely get possibly something way out wide, but it's a lighter liquidity stock, so just be careful on this one. It does whipsaw, but when you look at this chart and you look at the potential on that pullback, and you start looking at Fibonacci retracement levels, you know, you're starting to get almost in that 50% level. You know, depending on where you use the swing point here, you know, you're getting close to a potential nice pullback, healthy at least from a nice 8-year span of time. So here, we could still get a little bit lower, but after that it might be extended. I think 400 would be a nice price level to get it at, but that'd be, you know, pushing for a deal. Baba, very explosive to the upside here, continues to power higher. I think it's stretched. Can it still go higher? Absolutely. I think it's just stretched on the short term. I wouldn't short it, because you don't short stocks that are exploding to the moon. You don't short stocks that still have fuel in them, and that are trading on emotions. What you do is you wait for like a little consolidation and then a rip down. That's what you're waiting for. If you're looking to short these kinds of things, you're looking for testing and weakness and that kind of stuff. But this right now does not have that set up. So when we look at things like, let's say, NVIDIA, again, this is what you're watching for when you short a stock, is like a sideways price action. Now this again is still a powerful company. It might be right here. This is kind of more what you're watching for, like this, and you can see some bearish volume picking up right there. And if this broke down right here at about $95, that's where I would short, and of course on volume. But you didn't see that. You actually had more volume, so we exploded to the upside. So again, the same thing. If we consolidate sideways and we see more volume picking up that's bullish, again, stock will go higher. But consolidation is what you're watching for on these, especially with like Alibaba. It just continues to go up. NVIDIA, same thing. This thing is a monster. I would not short this yet. Wait for some sideways price action, even on the Bollinger Bands. You know, you're still kind of fair valued. But, I mean, monster explosion. Volume is still there. I mean, could it get to 250? Yeah, absolutely. But don't short it till you see a digestion. You want digestion. So just because things went up high or too fast doesn't mean you would short it. It just means things are stretched, but it doesn't mean I would go in and short it. So always be patient and be disciplined. Watch for key signals. Take a look at SHOP here. This one just continues to power higher. Volume now is picking up as well a little bit. I wouldn't say it's huge, a little bit. And past the 100 century mark also is a positive key sign for a stock. So that's always positive. We had a good digestion. Okay, so when you look at this, nice digestion and then sideways action, breakout right there. Stock looks good, over 100. That was your buying point. Right here was a little too fast with a gap. That was the issue here. This one, more of a rounding, a lot better, more safer. When you look at that square, also when we take a look at this here, we're kind of creating a rounding. We're also right there at that moving average. When you look at the daily, volume is contracting a little bit when you look at it. Has me a little bit concerned, but when you look at it, it's trying to break out, but there's not wide price spread. So that's what concerns me. The wide price spread is a bar. Look at that bar and look at that bar, right? The breakout bar. So when you see a bar that's this long on a breakout versus a bar that's that big, or a bar that's that big, or a bar that's tiny, I would much rather have a big wide price spread bar than a shorter bar or smaller bar or even a tiny bar. Bigger bar is a lot better on wide price spread. And AMD. AMD is very popular. This one, looking at the $12 range, has put a lot of different trend lines on this because people were asking me to evaluate this. Overall, the key line in the sand for this one is the $12 range. You also have some resistance right up here, double top almost, at the 1550 level. So you have some support at 12. You also have some support at 10. Those are your key levels. If you look at this stock overall, you can see there's some distribution here, which has me slightly concerned that if it breaks that $10 level, I wouldn't be surprised if it got back into the $5.50, $6 range. Could it go higher? Absolutely. If it comes back, holds it support at 10, and then goes higher and breaks the 1550, yeah, but there's a lot of distribution here, and the stock from the A to B, B to C, C to D pattern is a little bit stretched as far as what I look at. LT, here you go. Liberty, Tripadvisor Holdings. So here, this one, stock continues to move down and lower. So you can see this one, if you're looking for a bid, it's trying to go a little bit higher. right there on a short-term play. Again, long-term, the stock is toast. You can see it right here. You always check it. You always check the monthly, the weekly, the daily. Long-term, the stock is toast. If you're looking for a nibble, a day trade, maybe this one's caught my eye for a shorter term play, and the reason is right here, maybe a day or two holdings. Once it gets into here, I would more likely, around the $15 range, I'd rather short it. And that is because of the bigger, longer term picture that as we backtrack into the weekly, you could see the stock just continues to go down. But just for a day trade, I know some people ask me about day trading. I decided to put that one in. And the last one is Tesla. So this one continues to be very strong. We sold off a little bit right here, and then we are doing a slight little bounce. Now, this little bounce that we're doing is on lighter volume, and that's what I want to talk about. So when you start seeing these big companies that are bouncing on right here, light volume, look at that volume, look at the volume accelerating on the bearish side, and then we bounce right here, okay, we bounce on lighter volume, you more than likely will see these things roll over. And the same thing happens with the indexes, and the same thing happens with stocks. So when you see the larger volume, you can see there you got the pop. But here, this is what shows me the behavior is a little bit weaker, right? So I'm starting to see this movement to the upside, but I'm not seeing the volume. So that's why if this continues to move to the upside on lighter volume and then we sell off, those are the things that wouldn't surprise me or shock me. And once you start back checking this into the weekly, it also starts to create things like slightly lower highs, right? So it's only 2 points right now, which creates a line. So I wouldn't get too excited on that this stock is rolling over or anything like that. But if you get a third point, like you get a pullback, you get a third point that's lower, a fourth point, now you start creating a little trend in that direction. And again, these things, they like to, because they're so loved, they usually get bought out again. So if you get into the 300 range, you might get a short-term pullback to the 300 right here, get a little pullback, and then a bounce. So remember, when you're shorting companies, when you start creating a trend to the downside, they usually don't last long. If you're doing it a couple days, could be a couple weeks at most, depending on market conditions. This market is still a buy the dip market. That's what it's been doing. So continue to trade the trend that we have. Anyways, that's some insight for you on some stocks. Thanks for joining me this week. Hope you enjoy the rest of the week. Make it a good one, and I'll see you next time.